Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak podcast, available every morning on Apple, Spotify, or wherever you listen. It's Wednesday, the 18th of September in London. I'm Caroline Hepker.
And I'm Stephen Carroll. Coming up today, exploding pagers kill 9 and injure thousands more in Lebanon as Hezbollah blames Israel.
25 or 50, the Fed decides today as traders lock themselves into record bets on a half-point cut.
Plus, the hedge fund family tree, Millennium and Citadel nurture a $14 billion new generation. But there's no guarantee of replicating their elders' success.
Let's start with a roundup of our top stories.
At least 9 people have been killed and some 3,000 injured after thousands of pagers exploded across Lebanon. The militant group Hezbollah has accused Israel of orchestrating the attack, raising fears of an escalation in the conflict that's seen near daily skirmishes for much of the last year. Israel has declined to comment. Here's how US State Department spokesperson Matthew Miller reacted.
We are always concerned about escalation. We are always concerned about any type of event that may cause further escalation. And it remains our message to both Israel and to other parties that they needed to do everything they can to try and reach a diplomatic resolution.
Matthew Miller says the United States was not aware of the incident in advance or involved with the device blasts.
It is not yet clear how the pagers exploded, but theories range from the batteries being triggered to overheat to hidden explosives in the devices. The New York Times reports that US officials and others briefed on the operation say small amounts of explosive and remote trigger switches were implanted into the devices, which had been ordered from a Taiwanese company. Bloomberg has not been able to verify those reports, and the Taiwanese firm Gold Apollo has denied it manufactured the pagers used in the attacks. The firm did confirm it licenses its brand to at least one other company, but declined to provide any names.
The attack adds to tensions that have been building since July, when Israel assassinated a key commander of Hezbollah in Beirut. The prospect of a wider war in the Middle East, Russia's ongoing invasion of Ukraine and growing China-US tensions are now an increasing focus for diplomats and world leaders. Speaking yesterday, JP Morgan Chair and CEO Jamie Dimon reiterated that he believes we should be more concerned about geopolitical risks than whether the United States goes into recession. Here are some of his key thoughts from a conversation at the Financial Markets Quality Conference in Washington.
The most important thing that dwarfs all other things, that's really important, far more important today than it's been probably since 1945, is this war in Ukraine, what's going on in Israel and the Middle East, America's relations with China, and the attack fundamentally on the rule of law that was set up after World War II. This may affect the free and democratic world for the next 100 years. And I think that's the most important thing. I think people overly focus on, we have soft landing, hard landing. Honestly, most of us have been through all that stuff. It doesn't matter as much.
Jamie Dimon also weighed in on today's highly likely Fed rate cut. The JP Morgan CEO says that whether the central bank goes for a quarter point or half point cut, the move is, quote, not going to be earth-shattering.
Record wages have been placed, though, on the Fed easing rates later today, with most targeting a half-point cut. Bets on October Fed fund futures have topped any activity since 1988, and some risk sharp losses if policymakers opt for a standard-sized reduction. Forecasters are largely anticipating a quarter-point cut to 5%, but economists at JP Morgan expect a bigger half-point move. The hedge fund founder Ray Dalio says that a quarter-point adjustment would be beneficial for creditors.
What does the Fed have to do? Fed has to keep interest rates high enough to satisfy the creditors, that they're going to get a real return without having them so high that the debtors have a problem. So now if we're looking at this, whether it's 25 or 50 basis points, 25 basis points would be the right thing to do if you look at the whole picture as a whole.
Ray Dalio from Bridgewater Associates speaking there. Beyond today, investors see a more aggressive path of reductions this year than the series of quarter-point cuts expected by economists. We will have live coverage on Bloomberg of the Fed's decision at 7 p.m. London time and of Chair Jerome Powell's press conference at 7:30 p.m.
BlackRock and Microsoft are teaming up to invest in data centres and other infrastructure supporting artificial intelligence. The story from Bloomberg's Charlie Pellet.
The companies say the strategy, dubbed the Global AI Infrastructure Investment Partnership, will aim to attract $30 billion of private equity capital, leveraging that to as much as $100 billion to invest. According to a statement, the infrastructure investments, including energy projects, will be mostly in the U.S., with a portion of the funds being deployed in U.S. partner countries. The firms are also teaming up with Global Infrastructure Partners and Abu Dhabi's MGX, which was created specifically this year to invest in AI. In New York, Charlie Pellet, Bloomberg Radio.
Steve Cohen has stopped trading for Point72, where he will remain co-CIO. The billionaire hedge fund founder and owner of the New York Mets plans to focus on driving growth and developing talent. The firm that Cohen founded manages a record $35.2 billion as of the 1st of July, giving him a net worth of nearly $14.7 billion and making him one of the 100 richest Americans.
The German finance ministry is sticking to its commitment to sell off its entire stake in Commerzbank. That's despite UniCredit's takeover ambitions. Bloomberg's Tiwa Adebayo has the story.
UniCredit's sudden move on Commerzbank may have caught Germany's government off guard, but it hasn't altered their plans to offload shares in the firm. Bloomberg understands that divesting from the lender completely remains the goal, as previously agreed by the country's ruling coalition. However, it's not clear whether Chancellor Olaf Scholz agrees with the finance ministry's intentions. Any decision on further stock sales will need approval from a committee, including officials from his office. For now, at least, the path ahead remains uncertain. A ministry representative said a decision on how to proceed will be made in due course following further analysis. In London, Tiwa Adebayo, Bloomberg Radio.
In a moment, we'll bring you more on that attack using exploding pagers in the Middle East. Plus, we'll look ahead to today's much-anticipated Federal Reserve decision. But another story that caught my eye this morning, a household name filing for bankruptcy. This provoked an unusual response in the newsroom when the headlines came through a little bit earlier this morning. Really? I didn't think that so many people were that attached to Tupperware.
No, I've never been. Have you been to a Tupperware party ever?
No.
No, neither have I. But obviously, it's such a huge and well-known historic brand in the US.
Yeah, indeed. And look, it's been a company that's been struggling since 2020. Back then it warned of its ability to stay in business. As of June this year, it planned to close its only US factory and lay off almost 150 workers. So this bankruptcy filing in Delaware has been long in the preparation. There have been long negotiations running up to it. The company has more than $700 million in loans. Founded, though, in 1946 to bring its plastic products to the world.
Yeah, there are so many plastics makers now, though, to compete, aren't there? I mean, I think the equivalent in Europe is probably Tetra Pak, Switzerland, which was actually founded only a few years later in 1951. So anyway, that's of interest this morning. A historic brand filing for bankruptcy. One of the stories you can read on the Bloomberg terminal.
Let's bring you more now in our top story, though. The exploding pagers in Lebanon that have killed a number of people and left thousands injured. Hezbollah and Lebanon have blamed Israel for the attack. Our EMEA News Director, Rosalind Matheson, joins us now for more. Ros, how did this attack unfold?
Is that it seems to have been nearly simultaneous. This was not a long series of pages exploding, but largely at the same time. We know that about 3,000 people were wounded. We've heard from one official that about half of those were Hezbollah fighters, and several people have been killed. Hospitals, have been inundated with people seeking treatment. And these explosions took place mainly in the southern area of Beirut, and that's where Hezbollah does have a strong presence. Of course, Hezbollah, the militant group that's backed by Iran. And there's lots of footage, obviously, on social media of these blasts happening. It's interesting, of course, because most people use mobile phones now, less so pages, although they are used, we understand, by medical workers in places including Lebanon. And Hezbollah has relied on these kind of low-tech devices, walkie-talkies and pages to try and avoid interceptions. So it was actually, in the end, quite a smart target to go for when it comes to Hezbollah. And of course, Hezbollah and Lebanon have immediately blamed Israel for this, and there's been no comment back the other way from Israel claiming responsibility.
What's known, though, about how this might have been orchestrated?
Well, it's the sort of attack that would take many, many months to plan, if not years. This is not something that was probably just pulled together in the past week. It's one of what we could say maybe the more creative attacks we can recall in recent times. The initial theory was that it had been potentially malware and that the pages simply heated up to the point they exploded, but that doesn't explain how they did so all at once. And so now experts are theorizing, and some reports say that microscopic amounts of explosive could have been added to each pager at some point along the manufacturing and supply chain, and then they were triggered remotely. There were reports that pages could have been sourced from Taiwan, although a small manufacturer there has denied making the devices. But wherever they originated, there's a long and complex supply chain in getting them to Hezbollah fighters, where anything could have happened by others. So obviously, whoever carried this out at some point along that supply chain has intervened to potentially plant explosives in each pager.
Now, Hezbollah and Lebanon's government have blamed Israel for this. What is the wider significance of this attack? Could this lead to an escalation?
Well, that is the fear, of course. We have reports that US officials say they do believe this was orchestrated by Israel. There's a long history of covert action by Israel. They have claimed publicly the killing a few months ago of a senior Hezbollah figure in Beirut. And of course, they've been exchanging fire on almost a daily basis across the border from Lebanon. Hezbollah says they're acting out of solidarity with Hamas, which is fighting Israel in Gaza. And so the fears of that broader war are there. And Hezbollah is obviously better trained and armed, frankly, than Hamas. And while, 1,500 injuries is significant, it doesn't really make a dent in their fighting force, which is much bigger. And there's been those concerns also because Israel is now saying it wants the residents in the north of Israel who've been displaced by these skirmishes with Hezbollah to return. And that's a war objective. So again, it's all seemingly building to the potential for a more large-scale offensive between Israel and Hezbollah. And so that would open up the wars that Israel is fighting into two proper fronts.
Okay. Rosalind, thank you so much for being with us. That is Bloomberg's EMEA News Director, Rosalind Matheson, joining us this morning.
So, to another story now. Will the Federal Reserve cut by 25 or 50 basis points? Markets will finally get an answer later to the question that's been occupying investors for weeks now. To help us look ahead to the decision, our Markets Live executive editor Mark Cudmore is with us. Mark, great to have you on. So markets pricing in around 39 basis points of easing today from the Fed. That doesn't tell us much. What's your view?
I think they'll do 50. I don't think they'll want to surprise the market. In fact, just as I walked to the studio, we're actually getting closer to 40 than 39. I think that's kind of the tipping point for them to do 50. And I think that, it is still imbalanced, much more imbalanced than we're used to. But at this stage, it would be a much bigger shock to do 25. So I think they will deliver 50. And I think it'll be a boost to the market in the short term.
I was going to say, what does that mean for markets? Which outcome creates more volatility? But it seems like you think that the 25 would perhaps have a more volatile reaction.
Yeah, at this stage, it's absolutely 25 that will be upsetting. I think there's a perception in much of the market, whether true or not, it doesn't matter. The perception's out there that the Fed has helped guide towards 50 through various media stories over the past week, and therefore the 25 would be really confusing now. It would be more confusing. I accept there's a bit of divide still in the market either way. So absolutely, the much more negative outcome on knee-jerk would be on 25. Much more volatility as people recalibrate to that. I will say though, in either outcome, we've got so much rate cuts priced into the curve over the next year and a half that it doesn't really make a difference. If they do 25 today, everyone will assume 50 next time. If they do 50 today, everyone assumes 25 next time. So in the bigger picture, after the massive volatility we get short term, I don't necessarily think it's volatility into next week.
What are you looking out for then in terms of the messaging that we'll get from Jerome Powell when he speaks and what to look for in the quarterly projections?
So what I think is going to be really, really interesting today is how they justify the move that they go for. With my base case assumption, they go 50. Is it 50 with a very positive message that we are getting more folks to the labour market, but, we're just being preemptive. We think that the economy, rates are high enough and we can slightly ease policy rather than a panicked message of concern. That is my base case. I actually think this will be a very, very bullish Fed meeting. I think it'll be like December last year where they didn't doesn't seem to be any kind of economic validation to the sudden aggressive signalling that they're moving towards an easing stance. And that kind of extended the economic cycle, which is why we've not seen any rate cuts yet. I think that could be similar today, that if they go 50, but say, look, we're trying to get ahead of the curve, this extends the whole economic cycle again, and we really push out the bull market. Now, the bull market formulation will change in terms of it'll be less tech focused, there'll be a broadening of the rally.
After the Fed decision, though, Mark, interesting what you say. It sets up the Bank of England meeting, of course, and the Bank of Japan. I mean, we get the August reading of CPI for the UK also the day before the Bank of England. How does the Fed set us up for the rest of the decisions this week?
So obviously the Fed sets kind of the tone of whether we're going to see more dovishness or more hawkishness globally. So if they do deliver on the dovish end of the spectrum, as I expect, that will kind of weigh on yields globally. But again, I go back to the fact there is so much price in the curve. I think we get a dovish Fed today. We get 50 basis points, and the 2-year yields bottom this week, and we actually see yields rise into year end despite the 50 basis points cut, because people are going to realise they're complacent on inflation, they're bullish on the economy, or at least they're extending the economic cycle, and that means that ultimately yields need to price out the amount of rate cuts that are priced. So ironically enough, I expect a bigger cut today, and I think that'll actually see yields globally tick up towards the year end after the knee-jerk reaction.
Mark Cudmore, our executive editor from Markets Live, thanks very much for joining us on the programme. More from Mark and his team. MLIV is the function on the terminal.
With hedge fund titans Citadel and Millennium closed to outside cash amid a dearth of talent able to manage their money, some of the firm's traders are seizing the chance to go it alone, and investors are backing them with an avalanche of assets. The choice for the multi-strategy fund's founders, Ken Griffin and Izzy Englander, is whether to fight this migration or whether to embrace it. Our senior hedge funds reporter Nishant Kumar joins us now for more details on today's Bloomberg Big Take. Nishant, really good to speak to you. Who are these new hedge fund cubs then?
Hi, good morning. So first of all, who are cubs? It's a famous nomenclature in the hedge funds industry. You can call it as a group of famed hedge fund managers who all trained under Julian Robertson. Now, Julian Robertson was one of his generation's most renowned hedge fund managers, spawning dozens of cubs, essentially former employees of his who all learned the trade at his firm before heading out on their own. He was the founder of Tiger Management and played like this sort of a godfather to a new generation of hedge fund stars. He unfortunately died in 2020. But we are starting to see, others taking that role, whether they like it or not. Mm-hmm. And Citadel and Millennium are dominating that trend at the moment.
So what sort of money are these newer entrants attracting?
I mean, it's really unprecedented, to say the least. The 3 biggest startups this year, led by Bobby Jan, who comes from Millennium, Diego Megia, also from Millennium, and Todd Barker, who was at Citadel. Between them, they have raised $14 billion. It's a record amount in such a short period of time. And this is at a time when the hedge fund industry as a whole is bleeding tens of billions of dollars, for investor withdrawals. So it's quite unprecedented. The hedge fund industry has never seen this sort of activity led by startups ever.
Okay, so a new generation then coming to the fore. How are the giants of the industry then responding? You sort of mentioned that.
Well, they don't have much choice. They are becoming a victim of their own success. They are training this new generation of hedge fund stars who are seeing their careers sort of maxed out at those firms. And they're always thinking, what's next? We have to remember these are highly trained, skilled, ambitious people. So they are not going to be satisfied within the confines of their current homes. So multi-strats can't do much about it beyond maybe imposing longer non-competes to discourage them from spinning out. But some are responding by backing the outgoing managers. As we have said in the story, the next best thing to keeping talent is keeping your money with them so that you could continue, taking advantage of that talent.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.